Stocks see a broad-based sell-off with very few counters managing a green tick. Industrials, utilities are the biggest drags.
ICICI Bank feels the industry pressure on business growth but manages to report a strong operating profit while maintaining asset quality and return ratios. The stock gains.
The plot for the control of Religare Enterprises thickens, with US investor Danny Gaikwad proposing a bid for 55% equity as he sees value in the business. Berman's question the most, say they'll proceed with their open offer.
The government kicks off the process for appointing a new SEBI chief by inviting applications from candidates by the 17th of January. The term of the current SEBI chief, Madhavi Puri Booch, is slated to end on the 28th of February. You're with us here on Halftime Report on CNBC-TV18. I'm Hormaz Fatakia and with me is Mangalam Malu. Well, some bit of support coming in from lower levels, at least for the index. But the same can't be said for the broader markets. It is everything, right? You're heading towards the monthly expiry, the budget. You're also counting down to the uncertainty that's also coming in from the Trump tariff moves as well that we saw earlier this morning. And of course, the impending sell-off in a lot of these US tech shares, considering the new Chinese AI app that has come up. And that is causing a bit of a sell-off on the Nasdaq futures, which are down almost 500 points as we speak. But for now, the Nifty at 22,900, which is up almost around about 80 points from the lows of the day. The Midcap index and the small cap index, though, are the ones that are feeling the pain in today's session, as was the case last week and as is the case this week as well. 2.5% down on the Midcap index, almost 4% on the small cap index. And now the small cap index is down 15% from its September 2024 peak, Mangalam.
It's all happening this week. You know, you have a bunch of result reactions, you have a bunch of cues coming in from a macro and micro front as well, and global action also reigns supreme. So very crucial levels for the market to support this time around this week, which is fairly event heavy. It's good to see that the Nifty's held on to that 22,800 to 22,850 sort of support, though every time we've seen a bit of an up move from there, the decline has been more vociferous as well. So we'll keep an eye out on how that pans out. But let's get stock specific. Supriya Lifescience, the first management of the show. The company reported a good set in the third quarter. Profit after tax for them zoomed by more than 57%. Margins too expanded. So to discuss this and more, we do have with us Satish Wagh, who's the chairman and whole-time director at Supriya Lifesciences. Thanks a lot, Mr. Wagh, for joining in. You were expecting 22 to 23% growth for the entire year with margins of around 39%. I wanted your thoughts on whether you are on track for that or not. And more importantly, apart from that, I wanted your thoughts on what happens to the business in the US, largely because of reports that Trump may stop funding for, some of these medical aids, so to say, for WHO, etc. 75% of the funding for the world comes in from the US itself. Will that have an impact on businesses like yours?
Good afternoon. As far as Supriya Lifescience is concerned, you can see the revenue for third quarter, financial year 25, 185.6 crores, that is 33% year on year. If you see EBITDA for quarter 3, financial year 25, is 65.9 crores, that is 59% year on year. PAT is for quarter 3 is financial year 25, 46.7 crores, 57%, and that is on year. We are sure that we have done it in Europe, almost 40%. Now in Latam, we are going with 21% to 8%, and good growth from Europe and Latam and North America. We are having little presence in US, but we are expanding in US, and whatever we are discussing and whatever we have in hand, we will definitely do our best as far as US and other countries are concerned.
Mr. Wagh, good afternoon. Thank you for joining in. But since you mentioned you are expanding in the US, does this recent news flow that has come in with regards to Donald Trump stopping funding for the WHO and all of that, does that have an impact on your expansion plans, or do they proceed as they are?
Sir, our business is sustainable. We don't have any effect as far as any funding or anything is required. What we are doing, that we are already in the business for last 40 years, and we have seen ups and downs, and we are confident that we will definitely grow this year also.
All right. So if you could revisit your guidance once again, third quarter was very strong for you, and you had said that the CDMO business will start reflecting in your overall performance for the third quarter as well. If you could revise your guidance or revisit your guidance for the start of this year, you had said that this year you will grow between 22 to 23% with 39% EBITDA margins. By the end of this year, will you be able to manage that? And what's your prognosis for the next year with all the plans that you have in LATAM, Europe, as well as the US? What's your growth prospect for the next year? That's FY26.
Sir, if you see today, our exports are 79%. And that will definitely touch whatever we have promised as per the last. Also, we have already filed 4 CEPs in Europe because we are very strong in Europe. And 2 US DMS, they are in progress. If you see the total year, the top line is 512 crores. 193 crores is our EBITDA and 137 crores is the PAT. I'm quite confident whatever we have already said in our previous quarters that we will achieve, we will definitely achieve. And next year also, we will do our best.
900 crore guidance for FY26. Does that stand, Mr. Wagh?
Sir, I will not be able to tell you on any figures, but whatever commitments we have so far given, you will definitely say that we have already achieved and we have done it. We will continue to do that.
All right. What about the CMO opportunity? You said that, it will start kicking in the third quarter. Has that kicked in? Is that reflected in the performance that you've reported so far? How much bigger can it be as an overall proportion of your sales, say, in the next 18 to 24 months?
Sir, as far as CMO, CDMO, our Ambernath plant has already started qualifications. The production lines have already started. And we are confident that we have said whatever we will achieve. We will do the needful. I cannot give you any figures, but the things are on track.
In the past, you've said CMO will be 20% of your revenue in the future. You want to comment on that?
So we'll not be able to comment, but definitely.
But this is something that you've said.
No. See, we already have invested 130 crores in the CMO, CDMO sector. And we are confident that we will achieve and we will do good results from the CMO, CDMO activity side.
How is China Plus One playing out, Mr. Wagh? Do you see any further potential upside to your business from that?
101%. There are a lot of things which we are going to do in the CMO, CDMO sector. Some projects have already started, validations are over, and the products will be delivered. And I'm confident that the second half of the next year, it will be started as far as the revenue is concerned.
What about, some of the opportunities, therapy opportunities? You said that 2 opportunities were at an advanced stage and you would have more clarity by the third quarter. Have you had any clarity on that? What's the update here?
See, the projects which we have taken in our hand, recently the protein project has already started because the FSSAI has issued the licenses. Now the things will be on track. The volumes are very big as far as the protein is concerned. It's almost more than 18,000 tons. So it's a big volume. And we are the only player as far as whey protein is concerned in India with the American technology. And we have signed the contracts with them for next 20 years. We will do our best in that sector also. Many more projects we have already signed. The discussions are going on and they will be also rolled out next year by the second week.
All right. And a final question on the regulatory front. You had recently had a Health Canada audit that was cleared, no further notification. You were expecting a US FDA audit in the second half as well. Has that happened? What's the update here?
Sir, it has not happened. But, we have a customer base of 1,500 all over the globe. So every week we have always 2 audits, which is coming from either from LATAM, it's coming from US, from Europe. So we are always ready for any type of audit. And our people are very well versed with the audits and they will do the best.
All right, Mr. Wagh, thank you so much for sparing time and joining us. Wish you good luck for the rest of the year and for FY26 as well. The management of Supriya Lifescience is expecting to see healthy growth continuing for the company going forward. Time for a short break, but before we do that, let's dive into Growth Code, which is an initiative by Grow and CNBC-TV18 that offers valuable insights and strategies to help you make well-informed trading decisions. Now, this week, in a special interview, CNBC-TV18's Prashant Nair interviewed SEBI's whole-time member Ananth Narayan and asked him about the risks involved in the derivatives market.
you've done a fair bit in terms of weekly options and other things. Or is that work in progress still? Is this going to continue to evolve, and we'll see more sort of regulation and efforts to make people aware of the risks in this kind of activity?
Derivatives aid in price discovery. They give you depth in the market. They allow for risk management. They allow for trading, all of those things. And we do need all of these things for capital formation. So let it be very clear, SEBI is not against derivatives. We did have a problem though on two fronts. One was our first principal mandate is investor protection. And it was very clear from the two research reports that I quoted to you that small investors were losing out and that we cannot close our eyes to it. While we are a disclosure-based regime, we are not a nanny state. At the same time, we can't allow this to continue for a very, very long time. That is one particular issue. The second issue was we also saw a fair amount of overtrading and therefore increase in system-wide risk, particularly on expiry days. And when we spoke to our market participants and we consulted with them, what we realized is that the core issue really is not across the spectrum of derivatives, but specifically in the area of index options trading on expiry day, right? So out of the 6 steps that we announced in October, 5 of them were clearly and squarely directed at trying to curtail this question of overtrading in index options on expiry day. Now, we haven't directly tried to address investor protection, but by this oblique route of trying to bring down overtrading on that expiry day in index options, we think that will have some kind of a benefit for investor protection as well. We've taken the first set of steps. We are still looking at how the impact is kind of playing out.
Down 200 points for the Nifty right now. We have holding around that 22,900 mark for the frontline index. The mid-caps are the ones which are seeing a bigger cut. So good time to get in all the F&O updates at this point in time, largely because it's the expiry week. And that's how it has begun on the side of the bears itself. The series has been on the side of the bears. We have Nifty options. The 23,000 put writers have been fairly active on the covering side. So those who had thought that, maybe this would be an important support for the market, those guys have been caught on the wrong side, and we are seeing massive short covering at the 23,000 put. But meanwhile, just keep an eye on the 22,900 call as well. Those call writers are fairly active, telling you that around 23,000 and 23,050, we will see a fair amount of supply coming in for the markets as well. Were the markets to cross this, then all these call writers will have to cover their position. So that's something we'll most definitely watch out for. Another important marker that I'm looking at is the India VIX as well. Now it's crossed 18. And it is likely to rise further as we move towards the budget. So those are a bunch of things that we will keep an eye out on. Hermas.
We need to keep an eye out for that indeed, because the VIX climbing ahead of an event is par for the course.
Yes.
Right? It had the same thing during the general elections as well, and at the outcome now 8% higher for the VIX in today's trading session. But as we mentioned, there is plenty of pain in the broader markets in today's trading session. There are a lot of stocks that are seeing double-digit losses today. Laurus Labs is one of them, 14% down on the stock, back to the lowest point of the day. Netweb Technologies continues to sell off. Its shareholder lock-in comes to an end this week, and the stock itself has corrected almost 35 to 40% before that. But the one stock that is in focus over the last few minutes has been Balkrishna Industries. It reported an inline quarter, but the volumes have risen 5%. Now, Sudarshan, who was on the company's earnings call, is joining in now with the key takeaways from that. Sudarshan, tell us more.
So Balkrishna Industries reported earnings for Q3. The earnings were in line, but now in the focus is commentary that's coming from the con call that company held just few minutes ago. Now, two things have to be in focus. First, on volume front, company has maintained the forecast for FY25, that is the minor sales volume growth. But if you do the calculation, it comes out that in Q4, volumes are expected to fall. Second is margin. Now, there was a raw material price increase just ahead before Q3. Now company is saying that raw material prices have stabilized, but the increase that company had seen earlier, its impact company will see in Q4, and margin impact may be seen somewhere in the range of 100 to 150 basis points. So overall, earnings were in line, but commentary that's coming from con call is negative for Balkrishna Industries.
All right, con call commentary is negative, and as a result of which we are seeing that decline in the stock price as well. Speaking about stocks itself, take a short break, come back, get you more on the stock specific action, the markets on the other side. Stay with us.
CNBC TV18 special coverage here live from the World Economic Forum's annual meeting in Davos.
If I were to say even heart and mind put together, India is an exciting story.
CNBC TV18 will celebrate 25 years. The Honeywell view on India, and how do you see the next few years?
Domestic business doing extremely well. Can't be more pleased in terms of opportunities in India.
Years of covering Davos.
Cement is cheaper in India than potatoes are.
IT services as a business, we are at the cusp of a very big inflection point.
What has the Maha pitch resulted in terms of MOUs?
So it's 60 plus and around $200 billion.
It's a pleasure, let me say this on camera, to speak to the diva of Davos.
We should see a better year than 24.
Welcome back. And shifting focus to the paint space, which has been a subject of intense conversation over the last few months. Now, in an exclusive interaction with Shireen Bhan in Davos, JSW Group's Parth Jindal told CNBC TV18 that they are keen on buying Akzo Nobel's India paints business and that they have put in a bid. Listen to what he said.
With JSW first and then Birla's entering, I think the industry has definitely heated up, and it's led to the first bout of consolidation with Akzo Nobel putting its India assets on the block. My true belief is that the paint industry is not a winner-take-all market. It's not a capacity-driven market. You can't just build plants and expect the consumer to choose your paint. I think there's a lot of brand equity that has been created over the years by the incumbents. And this is an industry where you need to win the micro battles. You need to win over the influencers, whether it's the contractors, the painters, the interior designers, the architects, and finally the end consumer needs to select your paint. So it's been an interesting journey. It's completely B2C, and it's the first time JSW Group had gone into B2C. Now with automobiles, that's the second one. But it's exciting, and I think the Akzo Nobel opportunity is a really exciting one.
All right, so what Parth Jindal's comments have done is set the cat among the pigeons once again in the paint sector, which has actually been quite, it's been in a bit of a flutter ever since the Birlas announced their entry, their capex, and the way they're growing, the derating that we've seen in the names like Asian Paints, the biggies of the industry, and everyone and their neighbors having said that, okay, they might be looking at Akzo Nobel as an asset the minute it was announced to be on the block itself. So, perfect to get in an expert view on the sector right now, where things stand and what should investors do from here on as well. Manoj Menon, who's the head of research and consumer analyst at ICICI Securities, joins in now. He tracks the paint space very closely. Manoj, let's get this straight then. What are your views on this sector right now? This asset itself, who do you think is the best place to buy it? And is it at fair value right now?
Yeah, thanks, team, for having me today. So there are three aspects to the paints, industry and the stocks at this point in time. Post a significant recovery in demand, what we have seen in paints post-COVID, it seems that the general industry slowdown, consumption slowdown, seems to have caught up with the paint sector also, which is what we saw in the September quarter across the board. And the forecast for December is, that it's not really getting better despite the festive season, etc. Right. So that's point number one. There is an industry deceleration. Point number two, on the ground with the channel checks, which we see with a fair amount of regularity, we are definitely finding that the competitive activity which translate into higher competitive intensity. Let's say when it comes to, let's say, trade discounts, consumer discounts, etc., has also kind of increased, let's say, over the last 6 months, thanks to new players and also probably the existing players wanting to save their turf, right? Protect their turf rather. Point number 3 is the potential M&A opportunities for many of the players, and we remember actually writing a thematic about a year back on potential consolidation industry, even though we didn't expect let's say the current situation of AkzoNobel exiting India as a base case at that point in time. So at this point in time, look, when you look at the Akzo NV having decided to exit the decorative business in India and part of the industrial business also, except that they probably want to keep the powder coating, for the longer term, which is a small, portion of the India enterprise value. Look, I think it's a great asset for, honestly, all the incumbents, except probably an Asian Paints. It does make eminent sense for them to bid for the Akzo asset.
Manoj, good afternoon. Thank you for joining in. With all this chatter going around the AkzoNobel asset, which incumbent or company do you think is best placed to acquire this asset?
Okay, so let's take one name at a time. Let's see if you take Berger Paints. Dulux is actually a great fit for Berger. Given the fact that Dulux paint brand is over-indexed in urban, and competes quite effectively with Asian Paints, so that aspect actually is very much there. Second, is that for a Berger which has got over-indexation in the eastern part of India, again it actually makes sense from a geographic point of view and even from a product portfolio point of view. You take, for example, in Indigo Paints, right? Indigo has got about 15 to 20% or maybe slightly higher revenue coming from Kerala, which actually is a market which a premium brand like Dulux could actually do far better than what they're doing today. Again, there is a great fit. And Pan India, the Indigo as a brand, which is positioned as probably mid plus or mid minus slightly, whereas Dulux is clearly premium. So again, a great fit. And also the non-Dulux part, which an Akzo brings to the table for an Indigo Paints, which is currently the process of building. You look at a JSW, which had a fair amount of presence in the southern part of India. Again, a geographical presence which a Dulux brings to the table. Apart from the fact that Dulux being kind of very sharply positioned as premium, right? I think in which they are the number 2 after Asian Paints Royale. It's a clear winning proposition for any of these suitors actually. So difficult for me to actually pinpoint one of the plays. It's actually makes sense for almost everyone except Asian, which doesn't really have any white space.
All right, but in that case, the question is price, because if there are so many players vying for this asset itself, chances are that there may be a bit of a bidding war. So at what price is it good for whom? Because from a JSW Paint standpoint, immediately investors won't get affected because, it's not going out of any of the listed JSW companies. But players like Indigo, players like Berger, players like, Kansai and Nerolac, if at all they're looking at it, or even an outside chance, something like a Pidilite, when they're looking at it, given the sort of money that they will be paying for it, do you think it will be accretive for shareholders if the companies go ahead and pay top dollar? What, according to you, would make most sense?
So let me address this in 2 parts, without getting into numbers, specific, etc. If you look at AkzoNobel India, a stock we cover, right? So we have an ad rating and a fair value which is about 20% higher than, let's say the current price. So that's our fundamental view to begin with. That's our published view, right? So that's a sense on what we think has a fair value, irrespective of the M&A. Now, the second way to think about this is that, the current around $2 billion market cap, which AkzoNobel India trades at. If you look at AkzoNobel NV, the parent company, which is approximately around 10 odd billion euros, market cap and a few $1 billion of debt. The fact of the matter is that, let's say anything materially higher than, let's say the current market cap, given the fact that India contributes about 4% to the parent company revenue, 20%, of the market cap, etc. I think there is a cap that, given the contribution of AkzoNobel India to the parent company, or put it the other way around. If you look at the other paint companies, particularly in the last 6 months, which is all corrected significantly, I think these interlinkages will actually decide the incremental fair value, which, let's say, the strategic value, etc., the suitors may want to pay.
All right, that makes sense. Just a final question, and this one's not from the paint space. You also have views on other consumer stocks. In particular, Kalyan Jewellers is something that I want to ask you about, because you've been fairly positive. Fundamentally, nothing has changed. The company reported a strong, third quarter update as well. But the kind of price damage that we've seen on the stock reeks of things beyond fundamentals. Could you give us a sense of, if you're in the know of, what possibly explains this rapid decline in the stock price? Because now it seems to be, getting into that spiral of promoters increasing their pledge, the stock falling further, then promoters to manage that, perhaps pledging some more of its stock. What's exactly happening here?
Mangalam, thanks for asking that question. Look, in Kalyan Jewellers, Titan are the two jewelry companies which we cover fundamentally. Titan, we have a hold rating. Kalyan, we have an edge rating. That's the last published view. So no change to the rating, no change to the estimates, until it is published next time. Look, I think the fact of the matter is the jewelry industry has been having a very good tailwind of industry formalization. And Kalyan, in the last few years has definitely executed better than the peer group. There are a few other listed peers also, right? So I don't think that has really changed in the last month or so. So our fundamental optimistic view on Kalyan absolutely remains. Based on our observations and interactions with investors over the last 2-3 weeks, it appears that most of the chatter, most of the, let's say, news flow, etc., seems to be on the technical phase. As it stands today, we will go by what the company came out in your channel 2 or 3 weeks back, and also in investor call subsequently. Ramesh Kalyanaraman and the team, presented a lot of things from their side of the story on a lot of the chatter which is going on in the market. It was an open call for any investor to ask questions, and I think they responded to many retail investors also. As far as we are concerned, we are taking a position that the fundamental stance is absolutely intact. Technicals, will take its own course.
Fundamental stance is absolutely intact. Manoj, thank you so much for joining in, sharing with us your views on the paint sector and, of course, Kalyan Jewellers, which has been the subject of a lot of chatter over the last 2 to 3 weeks. That was Manoj Menon there of ICICI Securities. By the way, Kalyan Jewellers, as we speak, is recovered from the lows of the day. Slight recovery, of course, 3.5% down still, and down almost 45% now from the peak that was close to 800 rupees a piece. Time for a short break, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. You can get instant access to breaking news, in-depth articles and financial world updates at your fingertips, and you can download the CNBC-TV18 app from the Apple Store or the Google Play Store right away. Welcome back. You're with us here on Halftime Report, and Transport Corporation of India is our next management on the show. It reported a good third quarter. CVA's division continues to drive its profitability. While to discuss this and more, we have Vineet Agarwal, who is the managing director of the company, who is joining us. Vineet, good afternoon. Thank you for joining in. You've given a FY25 guidance to grow between 10 to 15%. For the first 9 months, you've done 12 in terms of revenue. Which is at the midpoint of your guidance. Do you expect to remain at the midpoint, or by Q4 you would expect that to go to the higher end, which is 15%?
10 to 15% is a guidance based on some numbers that we forecasted, and things have been quite slow this year. So I think we'll be probably at the mid end of this number itself at 12-13% for the full year also. But the profitability is much better. We had projected a 10 to 15% increase in the bottom line, but we are slightly above that.
Take that point, and a lot of that profitability has been led by the CVA's division, where you've called out that route changes and increased freights, etc., have supported your realizations out here. So the question is how long this is sustainable for, because, you've said that CVA's margins on a sustainable basis could be around 28 to 29%. Freight margins around 3% and supply chain margins around 6.5%. We've seen deceleration in both freight and supply chain, whereas CVAs from the 28-29% have moved to around 33%, keeping your overall margins at around 10%, which is pretty much in line with your 10 to 11% sort of guidance. How does the internal of this change, and what's your prognosis here?
Yes. So CVAs, the business has been positively impacted because of the Red Sea crisis, where we know that some ships that were on our sectors that we operate, which is on the west coast from Kandla to Cochin and Tuticorin and Mangalore, that got affected. Some of those ships moved from that sector, and that meant there was a less capacity available, which also meant freight prices went up. And also in the last quarter, actually fuel prices, that is bunker prices, came down. So for us, it was a double positive from the CVA's perspective. On the other businesses, there is a general slowdown, as we already know, in the economy, and that affects both those businesses. Freight is directly linked to GDP growth, and that was slow in the last quarter. As we know, that has had some impact on margins as well. And in supply chain, I think the interesting thing is that we are actually in a very large investment mode. It's like we're creating new facilities for lots of clients. We have a lot of bench strength that we have created for people, and that's in line with the pipeline that we have for the next few months. So very interesting times there, and this is just a temporary blip in terms of margins, but I think it's going to come back very shortly.
You mentioned higher freight rates. Vineet, what is the situation currently? It stands, especially when it comes to the seaways freight rates, and how is that impacting business?
Well, currently there is enough demand. This is Q4, and Q4 is essentially the best quarter of the year for us. Also, a lot of corporates are closing their books at the end of March, so there is a push towards sales. So there is a high demand, and consequently there are lesser ships. So freight rates are stable, and they're stable, and they are helping us get the clients that we need to move all the cargo that is right now available.
Right. And what about, the cold chain business? How much has that turned out as an overall proportion of your sales in the third quarter of the first 9 months of this year? What's your outlook for this one as we move forward? And also quick commerce. You had said that, you've done well there with the fulfillment of dark stores, etc. This comes in light of some of the other competitors also starting this 2-hour delivery, at least in the cities, for D2C players. So how does, the environment look out there in both quick commerce as well as the cold chain business?
Actually, on the quick commerce side, we don't do any deliveries. So we only do the fulfillment. That's the back-end warehousing, because we've realized that the deliveries are really a very low price point kind of business, and really the margin structure there is not very good. So we focus more on the fulfillment side. We run a lot of warehouses for the quick commerce guys, including cold chain warehouses. I think the interesting bit here is that the cold chain warehouses have a separate kind of a delivery system, because when you're delivering from that particular fulfillment center to a dark store and subsequently to a customer, the cold chain has to be precise. I mean, you don't want a melted ice cream to reach the customer. So that is high quality and high frequency deliveries that is happening from these fulfillment centers. So both the cold chain business and the supply chain business, where some of these quick commerce guys have just started to really pan out and go into smaller cities, we are seeing a massive growth opportunity. Again, as a percentage of our business, this is going to be quite small. But as a function of how we can change the network design of supply chains, this is a big deal. Because how consumer companies, FMCG companies were servicing other sectors, other channels, this is another new channel that has gotten added.
Right. So, just a quick follow-up before we let you go. You always guide for 10 to 15% revenue growth basis your assumptions, and similar growth on the bottom line as well. This time around, you've done better on the bottom line. What's your early prognosis for FY26, and what is it that the budget can do for you to grow faster than this?
We don't expect anything major from the budget in the sense that there is, for our sector, if there is continued growth in investment into capital infrastructure rather, that will help us because we are a multimodal logistics company. We need those connecting infrastructure of road, rail, sea, air to be integrated together. So that continues, that helps our sector. General GDP growth, EXIM growth, I think those are factors that are going to help us in terms of our growth. I think we are looking at a slightly the softer growth for the first few months of the year, but then post the August, September festival season, we are anticipating a higher growth. So I think, it's just repeating the same, maybe a 10 to 15% on the top line for FY26, but I do expect the bottom line to be slightly better.
All right, Vineet, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of Transport Corporation. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned. Welcome back. And the sell-off in the US futures has intensified as we speak. The Nasdaq futures are now down 550 points and we're still a while away from market open on Wall Street as the concerns over DeepSeek and its potential impact on this AI rally that has led the markets in 2024. The Dow futures too are down almost 350 points. But back home, there is no let-off in the market whatsoever. The Nifty still remains at the 22,850 mark, but the list of stocks with double-digit losses has also increased. We spoke of Laurus Labs earlier. We spoke of NetWeb Technologies earlier. Kaplan Point is another one that's down 10.5%. Tejas Networks is down 10%. It was down almost 10% on Friday as well. NetWeb is now down 11%, and Kaplan Point also is another one. And Nugent Software is the other one that is down 10% in today's session after that downgrade that came in from Jefferies last week post its quarterly results. So no let-off whatsoever in the broader markets. Take a short break. On the other side, Manisha Gupta will join in with Rahul Sharma, who is the Director of India at International Zinc Association. Stay tuned. Back on the other side. Welcome back. 250 points lower on the Nifty, still continuing to hold on to that 22,850 mark though. But the broader markets, as we went into the break as well, there is absolutely zero relief that is coming in. Aditya Birla Sun Life AMC reporting results today is down 8% ahead of the results announcement. And some other losers in the broader markets include the likes of Piramal Enterprises, which is down 7%. CAMS is down 7%. Of course, that might be also a sentiment impact when it comes to the results from CDSL and the reaction to that. CDSL itself is down 9%, and that is having a residual impact on names like CAMS as well as on shares of BSE that too are witnessing some selling pressure in today's session after that results that came in from CDSL. We'll talk more about this over the course of the day. But there are some names that are bucking the trend, though it's not all red. Bank of India is an earnings reaction that is on the positive side. That's trading with gains of around 5%. So there are some stocks at least that are bucking the trend in today's session, some earnings reactions as well. Over to Manisha Gupta now for our commodity corner.
Well, thank you so much for that. And the metal in focus is zinc right now because we've seen the prices decline. Well, remember, zinc was an outperformer in the previous year. We saw almost 14% of gains come in. But for this year, until now, it clearly has seen a lot of decline. In last 1 month itself, it has been a 7% of a cut coming in for zinc. It's trading at almost 19-week lows right now. And while, of course, there are tariff concerns, but the fact today clearly has been about all the Chinese data that came in on a weaker side. So whether it has been about China's PMI numbers, services sector, factory activity, all of those numbers came in on the weaker side. What is the sense from here on when it comes to zinc? For that, we are going across to Rahul Sharma. He's Director India at International Zinc Association. Rahul, hi, good to have you. First of all, your sense on the prices itself, because it's been a bit of a disappointment for manufacturers in this year until now.
Yeah, good afternoon, Manisha. Well, we are undergoing through a very uncertain times, because of various, I will say, variables, For example, President Trump has again come into picture. But overall, if you look at the zinc, it has been the best performer of LME base metals, last year, trading about 3,000 tons in December compared to 2,537 in January. So this puts last year's average price 6% higher than the 2023 average. So the price strength seen this year can be attributed to supply pressures, including production disruptions at key mines. For example, Glencore MacArthur River Mine in Australia halted operations in March owing to extreme rainfall. And Chinese mining company MMG's Dugald River Mine in China was placed under care and maintenance during the third quarter. Right. So the zinc market had a 164,000 tons of deficit in 2024 as per the International Lead and Zinc Study Group. So, but there are few other things like, the Boliden Stara mine in Ireland and Portuguese mining company Almina Aljustrel mines in Portugal, they also reduced mining output. So,
but Rahul, for this year now, this profit taking, this price correction, how are you reading this now?
Well, there is lot of volatility in the market, and because of unpredictable circumstances. For example, it all depends on the President Trump's policy.
Oh yes.
That where he's taking the world. So the prices may crash also, or if it in terms make a bullish trend also. So
but how are you looking?
It's very difficult. Yeah.
I can understand that. Rahul, how are you looking at the Indian demand right now, the production, the cost of production and cost efficiency for that matter?
Well, India, India is very much stable in that sense because, first of all, we are the fastest growing economy in the world. India produces almost 880,000 tons of zinc. We are getting a lot of zinc demand from Middle East because Middle East is really facing zinc deficit, because the Iranian companies, they are sending material to Turkey, and European smelters, they were struggling with the TCs, high TCs in the market. Right. And then same is the case with the Southeast Asia. So Indian zinc smelters, they are getting a lot of inquiry from Middle East and Southeast Asia, as well as domestic growing demand, So I will say, yes, it's a good time for Indian zinc companies.
Okay. A quick word on the prices. Do you believe the prices to come back to 3,000? Because currently all the estimates that we are seeing for 2025 mostly believe that the prices will be lower than 3,000.
Yes. So many, consultants, they predicted that the prices might crash and it can go up to $2,600 something. But if you ask me, I will say I am a bit positive about the global scenario. So current prices are almost more than USD 2,800. So if you look at the long term, I will say the prices will be in between 2,800 to 3,200 in 2025.
Okay.
There are few reasons. If prices comes below 2,700, the Chinese buyers, they buy bulk quantities in the tune of say 100,000 tons. So that's a big quantity, and that impacts global scenario.
China has been always smart. Yeah, China has always been very smart onto that. But I get your point. But I get your sense, as you said, that 2,800 to 3,200 really looks like a probable range, because below that you'll have a lot of buying. Above that we will perhaps have demand destruction. So either side, the range that you have put out really seems on the well side. Rahul, thank you so much for joining in. But that's all the time that we have on this show. Thank you for watching. Business Lunch will take all the action ahead.